Hi, my name is Jesse Durham, and today's subject is going to be taxes. Let's look at some things that have been said about taxes. Now, I'm no tax expert, won't be making any tax advice here. I'm simply going to be approaching this subject from the lens of becoming your own banker, as described in R. Nelson Nash's book, Becoming Your Own Banker. And I'll be promoting the idea that we can become our own banker, even in the event of taxes. So regardless of how we feel about them, they will be paid. Jesus Christ said that render unto Caesar that which is Caesar's. And other things have been said. People like Dave Ramsey talk vehemently about refunds, for example, and how the government is refunding you your money, but without gains, without interest. So it's a passionately discussed subject. Robert Kiyosaki, the author of Rich Dad Poor Dad, said that taxes are our single greatest expenditure. And then Nelson Nash himself said in his book, there's a section where it talks about him prompting us with a question of who's the greatest thief in the world? And then it's the Internal Revenue System. So again, regardless of how we feel about taxes, they exist, we pay them. I'm here to ask the question, what if we could pay taxes and get the money back? What if we could not take any additional risk, not lose control, have guarantees, not work any harder, and just pay our taxes if we have taxes to be paid and get the money back? Well, there are some things that we will touch on before we get to that subject, but let me say, in case this is the first video that you're seeing here, that what we will use, and again promoting R. Nelson Nash's work, what we will use are whole life policies that have been properly constructed for the banking purpose with a mutual company that's paid a dividend well over 100 years. Mutual whole life policies properly constructed for banking with dividends. We will use that because we own it, we control it. So we can own and access the capital that we amass there. And in this example, we're talking about taxes. To be able to pay taxes, and then we have a system in place, again, that we own and control, to be able to get that money back. Now, how do we do this? So we pay ourselves first. We build the system. We pay ourselves with interest because interest is always paid on what's financed, and everything is financed. Either we're paying interest to somebody else or we're forfeiting the interest that we could have otherwise earned. So we pay ourselves with interest and then we recapture the money. Those are the three rules of banking. So let's look at an example real quick, very simple. And I understand that we can have business owners seeing this information, big business owners, investors, self-employed. But let's take a look at an employee as an example. And let's say this employee is on an 8-hour-a-day schedule for 5 days out of the week. Well, if we assume a 30%, I understand decimals can go left and right. This number could be smaller or greater. But let's say, for example, a 30% tax rate is assumed. That employee will be working a little over 2.5 hours a day just for taxes then. And if we walk that out over the span of a year with 2 weeks of vacation, 50 weeks, that's right at 660 hours, if I'm not mistaken, which if we walk backwards then is going to account for January, February, March, and a little beyond April. 4 months out of the year for that employee were spent working simply to pay taxes. Now, if you don't have a system in place, that money is going to forever be gone. And what we're talking about is capital, principal, that is spent in expenditure because there's not a system in place to be able to recapture that, grow it, and expand it. Also, the interest that could have been earned thereon, and then the renewed access and control of that capital. And then it's just a spiral. So, again, what I'm here to promote is the idea that we can, even in a scenario like that, or any other business owner, big business, investing, whatever the case may be, wherever taxes are accounted for in your financial footprint, if it were a pie chart, whatever slice of that pie accounts for taxes in your particular situation, what if you could pay that, but then get that back into your business capital, get that back into your family's finances, get that back into what's available for you as an investor? So, taxes are certain. It'll look different for everyone. There's some things that we can consider in evaluating whether you're vetting this idea of becoming your own banker for the first time, or you're already practicing the infinite banking concept, but you've not applied banking to taxes specifically, because there's any point, because again, everything's finance one way or the other. There's any number of points where we could tackle the subject of the infinite banking concept and apply it. With today's subject being taxes, and we're actually in tax season right now at the time of the making of this video. Everybody's talking about it. I've been receiving text messages about it and whatnot. So I wanted to cover the subject, obviously. And again, with Kiyosaki saying it's our single greatest expense, it's simply not to be overlooked or ignored. For those that are trying to live free and independent, open-minded, grow and expand, prosper. So let's look at, here's another train of thought. Let's look at the flow of money and the pinpoints in that flow. The circle of life. Let's look at the pinpoints in that flow of money where there may be some tax implications. So when we do earn an income, regardless of where and how we earn that income legally, normally taxes are to be paid on that income, on those gains. And then when we have those earnings, we normally go out and we'll buy something. We're going to procure something. And normally there's a tax implication there where we're paying a tax on our purchase. And then when we quote unquote own said item, whether it's a car or a home, anything, there are many, many situations where if we're not paying taxes actively currently on that item, I mean, even if we had a home without a mortgage, didn't have a mortgage, if that were paid off, if we didn't have it, and we didn't pay the taxes on the land, how long are we going to own that home? Not very long. And then when we ultimately get to a point where we want to have a transfer of wealth, we approach what is called by some the death tax or an estate tax, where we're wanting to bequeath something, we're wanting to pass on or transfer some asset, some form of wealth to our family, to our heirs, and there's taxes again. So it's too big of a subject to ignore. That is why we're tackling it here. And that is why we're saying that properly structured whole life policies with a mutual company that pays a dividend, that we own, that we access and control, that has all the guarantees that it does, is the tool, the best tool that we can use to practice the infinite banking concept, so that we pay these taxes, we take care of that expenditure, but then we get the money back. Pay yourself first, pay yourself with interest, recapture the money. So that may require some hands-on approach from you. You know, as an employee, you may want to talk to whoever's in your human resources office so that you can change something on your paperwork so that more cash is alleviated up for you on a regular basis instead of so much being taken out. You may or may not. I don't know. That's something for you to consider. If you're making quarterly payments as a business owner, what if you were making those payments, that premium, into a system that you own and control, that you could then take your access to that system and that capital in it to pay that, and then repay yourself back and build your system out like that? Just food for thought. So sure, there are some practical things. If you do get a refund, doing something wise, doing something beneficial, obviously not spending the money one time and it be gone. I'm not telling you what to do, but what I'm saying is, what if those dollars in all these different scenarios that I've just briefly laid out, what if in each of these scenarios we could accomplish more than one task with the same dollar? Food for thought. Nelson Nash did say there's only one pool of money. What matters is how much you keep, how much you have access to and you control, and that you can keep within your privatized banking system. I know that this has just been a brief dive into the subject of taxes, but I hope that it has prompted some questions. I hope that it's prompted some takeaways. I hope that it will prompt you to read R. Nelson Nash's book, Becoming Your Own Banker, and look at what we can do by paying taxes to grow and expand our own privatized banking system that we can use now to better our business, to better our family's financial ability, to better our investing, whatever that may look like, but then set us up also for the long range, because taxes have been, taxes will be, we're certain of that. So do we have a plan in place? Do we have a system built? You know, are we getting the right questions asked, and then are we getting good answers to those? So I do hope that this has been beneficial and helpful in you considering your approach to taxes. And again, I'm not a tax expert. Speak with someone who is. That's great. But remember, you can become your own banker. So if you would like to have a conversation with me about your business, about your household, your investing, whatever your scenario happens to look like, so that I can answer specific questions, you can reach me. You can email durhamtalents@gmail.com, or you can call or text 828-817-4223. I'd love to be able to have a conversation with you about how we can apply the infinite banking concept for the purpose of you getting your tax money back. So this has been a great pleasure for me. I hope that it's been helpful. Take care. Have a great day.